Hello, this is Eric Whiteside with the EW Tech Nerd in our weekly QuickBooks online training session. And we're here with Ms. Lisa Thompson, who is a recent entrepreneur and owner of Black Royalty Apparel, LLC. Say hello to everybody, Ms. Lisa.
Hello.
Look at Ms. Lisa. We're so proud of Ms. Lisa. Today we're going to cover assets and enter into assets into QuickBooks Online, and then why your assets and your balance sheet is important, not only for your good record keeping, but also how it relates to your relationship with your CPA, and also how your relationship with the bank and different potential loan products that can arise from being able to properly record your assets. So what we're going to be looking at is eVision Corp's balance sheet for 2018 that we need to look through, and I need to go get the printout because I'm going to be doing some marking up of this. So the first thing we had to address is that we had our CPA come back and ask and say, hey, is your 2017 or 2018 asset numbers are correct? So what we did in this balance sheet is we set up a category for all 2017 assets, 2018 assets, which could cause some confusion. We thought it was going to simplify it for the purpose of the CPA can see that. And in 2017, we did an accumulation depreciation of about $37,000 for all the equipment that we purchased in 2017. So one of the mistakes is when we looked at this is that we failed in the chart of accounts to make sure that these assets from 2017 were properly placed under 2017. So we had started this process of placing these assets in here. So as you look at this spreadsheet for 2017, so all of the total assets of 2017 here, so it is 2018. Now we show a laptop, we show an iPhone, 2 iPhones, and we show a ceiling mount and an 8-port device and a Dell laptop in these laptops. Now, we need to verify that these are assets that actually came in 2017. Because I'm gonna tell you the perfect world, which is CPA licensee is you go out and you buy, say, this Dell laptop. That laptop, you buy it through the business bank account, and it comes across your QuickBooks as a transaction. Say you bought it from Amazon or somewhere of that nature. And then now, when you go to set that up in your banking section, then this is where you would create the asset. Hey, I got this because we got a verifiable proof that I paid $1,000 from Amazon, and it came through our banking. I'll go here. It came through our banking transaction. Say here, it came out. And so when I talk about, let's just say that was the $1,000 asset, then this is where we'll need to go ahead and add and start to add that asset as a new asset, whether it's the new laptop from Amazon. So let me show you how that looks. So we go in here. So say it's a laptop. So I'm gonna go into my fixed assets, and great thing that QuickBooks Online has done is they have did a great job in improving this section in assets to help you. So you can categorize what type of detail type these assets are. So it's a computer, a copier, furniture, or tools. So, and you can put your opening balance of that particular asset. And so one of the things that, one of the biggest mistakes though, let's say if I put the opening balance of $1,000, but I'm actually going to take this transaction of $10 and say it's an asset, then what have I done? I've created more value in the asset. So we don't want to do it that way. So normally I would leave the asset at 0. It'll get its first balance from the actual verifiable transaction that actually came through your bank to QuickBooks. Now, ask me, why do you think the accountant loves this type of asset? Because accountants don't like speculative value for an asset. They want to see proof of assets. So what you paid for the asset is actually the value they like to back it up. Because what do they have? Why is that important? Lisa, why is it important for them that they will always default on the value of the asset being what you actually paid for, not what you think it's worth?
I don't know.
So think about it. If you pay $1,000 for the laptop, right? Let's say you're in the retail business, flip business. So say you paid $1,000 for a laptop, but you saying, hey, this laptop is worth $3,000. I just got a deal, right? So what value would you put on your books for that asset?
3,000.
See, that's in your mind automatically. You saying, hey, it's worth 3,000 because you don't went out and saw someone on the web that what it's worth 3,000, but you only paid 1,000 for it.
Okay.
So when you put it in your books, you want it to match the transaction that came through what you paid for, and that makes your accountant happy. Does that make sense? Because he can see what that you paid 1,000 for it through Amazon on this date, and you're saying the value of it is $1,000. Does that make sense?
Okay. Yeah.
So it's really important to know. And I'll use this as a scenario for you. Because in your case, you're retailing, so you're buying something at a wholesale rate, and then you turn around and sell them the retail rate. So let's say you bought, let's see what kind of asset to show you bought. Let's just say you bought a piece of furniture. When you first brought it in, you say, hey, I'm bought this piece of furniture for this $1,000. My plan with this furniture in the next couple months, though, is I'm going to sell this asset for $3,000, this piece of furniture. But you bought it for $1,000. So now you first bring it in and put it in as an asset for this $1,000. And then later you'll look at, okay, I'm gonna go ahead and sell it. Once it's sold, then that's part of that sale will come off of this asset, which is zero this asset out. And then the rest will be what? You basically the profit you done made from selling that particular asset. Does that make sense? Okay, so let's do this. I'm gonna do some transactions that I'm working on now. So I'm gonna go to the chart of accounts. And so the chart of accounts, and I know at least you have went and did the basic course for you yet to teach you the basics of the different areas inside your QuickBooks Online. So the chart of accounts is the most important part of your QuickBooks Online and a part of your company financial system. Chart of accounts will show all of your different accounts or type of accounts. Is going to correspond with also your tax chart of accounts on advertising and how you categorize your expenses. So chart of accounts is very important and understanding that will help you when you're doing your matching. So the first thing we do is we'll look at, when we get into the basic courses, we're going to help you set up your chart of accounts for BlackRock. When we do any transaction, we're going to look at, okay, what kind of transaction is going to come through, and I'm going to explain to you why this particular chart of account, expense or income or owner's equity, why is important. So what I'm doing now, let's look at this balance sheet that you have. So what I'm concerned with is the 2018 fixed assets. So first, let me pull up the assets that I need to have in there. That I've tracked. I got 3 office desks that I hadn't put in here. A refurbished computer, 3 refurbished HP laptops, and 2 SC drives. That's all I want to show for 2018. So what that means is I got in here this Dell that was bought in 2017 and this Dell Latitude. So I got to go in here and find that asset. And I got serial numbers on this so that I can distinguish the two between the Dell Latitude computers. So I'm going to put in Dell Latitude. And there's the first one, D. So I want to make sure that the subcategory I see right now is subcategorized to 2018. But this is the actual 2017 asset. So this is what causing the confusion from the CPA standpoint, because we categorized those, but we didn't fail to move them under the right year. So we're going to go and find 2017. And we're going to hit save. So that's going to remove that one. So under 2018, and 1 second, let me just go and pause this. So now that we've moved that Dell, I want you to mark out that Dell, which one was that? That was the one that was DNM64R1 under 2008 assets. Can you find that? Should be on page 3 of the balance sheet.
Okay, is there what?
It should be the Dell Latitude with serial number DNM64R1.
I see it. Okay.
So mark that one out. That one's going to be removed. And now I'm going to the next Dell Latitude, not under 2018 fixed assets. It moves up to 2017 assets. So now the one above that, the one that's 3WFMFV1, you can go ahead and mark out. We can mark that one out. It's going to move up. So one of the things I want to show, after we clean up, we're going to add assets. So let's see, in here we got the HP Elite 14-inch notebook. Okay, so let me go in here. That's a 2017 asset. And the HP AMD computer. So look at my screen. See how I did that. So what I did was, by creating those yearly categories, we need to make sure, so to be clear to the CPA, that hey, these assets were this year. Now, ideally, what was the mistake? If we go back to our my initial comments about, ideally, what you wanted was, when I paid this $635 for this computer, it should have came off my business credit card, my business checking account, and came in as a transaction, and then created this asset. Then it would have been linked to that transaction. So now we're going to go in here. Same thing. This is not a 2018 asset. This is a 2017. And so now what we have is we did the Elite, the HP laptop tablet. Same thing. That's not a 2018 asset. That's a 2017 asset. The HP laser printer. That printer is a 2017 asset. So now we have cleaned that up. So I have a Harmony heavy duty Teco motor wrench set. Now this wrench set was bought last year, and so this will stay in. The docking station was bought last year, and the Linksys was bought last year. And so let's look at those. Let's go back to the balance sheet for last year. And let's look at those 2018 assets. And where is that rent set? Now, I want to click on that. And that's when we pay $62 for that. Okay, so I'm going to make sure of that. Docking station, links. So the total fixed assets right now is showing a negative because of an appreciation of $7,000. We're going to fix that, because what we're going to do now is add new assets. So we're going to go in here, and I got the dates on these assets, so I'm going to bring these up here. Let's find the assets that we're going to be adding. So these are the assets that we're going to be adding. We're going to first by going with an office desk I bought in June the 26th, June 27, 2018. So how do we add an asset? We're going to go over to chart of accounts. We're going to click new. I'm going to go to fixed assets. And which one of these categories will I put this office desk in?
Furniture, fixed furniture.
That's correct. So we'll make it a fixed furniture, and we'll call it office desk. We're going to put a number by it since we got another office desk. We'll call it office desk 1, and this is the one in Simone Holmes' office. And original cost, we'll track it for depreciation. Original cost will be $79.76, and it was bought. I'm not going to track this one for depreciation because it's such a small amount. So we're going to say it was bought June 27. And now that fixed asset is there. So guess what? So when we go back to reports and we look at our balance sheet from last year, we should see this due under oh, you know what? What did I fail to do? So categorize that asset, office desk 1, to 2018. So I go back in, Office desk 1. I'm gonna hit edit, and I'll make it a subcategory of what? 2018 fixed assets. Now, when I go back to reports, what should I see, Miss Lisa? I should see under 2018, what should I see now? I should see the office desk, right?
Yes.
So let's see if we find it. Let's see. There it is, office desk. Office desk 1. So we have another office desk in here. So now we're gonna go back and put office desk 2. So we're gonna hit new. Now what kind of account type, Miss Lisa? This is gonna be what? A fixed asset, right?
Yes. Fixed asset.
And what kind of detail type?
Furniture.
Furniture. We'll call that office desk 2. We'll say Eric's office. And it's a subcategory of what?
What's the
2018
2018.
fixed assets. And the amount of that desk is 156.51, and that was bought on March 28, and that's 2018. So now we'll go in and add. Did I put a number on that? Did I call that office desk 2? So now let's do office desk 3, and this time I want you to do it. So I'm gonna give you control. Let's see here. Let's move this so I can give you control. What is going on with that screen? Let's see here. What's my meeting controls? It must be my third screen here. There we go. So now we'll add this back. And there's the meeting controls. And let me give you control. And now let's go back. Okay, now you have control. We have a third office desk that we need to add. So, what do? Access, that's good. What is the detail type? Office furniture. And now, type in the name at the top. Remember, this was going to be called Office Desk 3. So we'll say fixed furniture. Make it all lowercase.
Oh, okay.
I mean, make the first letter uppercase so it can look consistent with the rest. Space desk. Put a capital D and a space.
Go.
Make that number 3. Now we're gonna go in the description of that desk. That is American Capital's office. Okay, and put your, make sure you put you spell that properly. Let me help you. So you take it over here, and you can right click, and it'll help you with that. So now, what is it a sub account of? 2018. And that's all you got to do is hit enter. You ain't got to put it just 2018. That's it. Okay, now the original cost. This Office Desk 3 was $79.18. And this was purchased on 5/15/2018. Let me get my charger. What? Find it. That was 5/15/2018. Okay. Alrighty. So now hit save and close. Now let's go verify your work by going to reports. On the left-hand side, go to reports. And what type of report did we get this information from? What's the name of the report?
Access.
No, balance sheet.
Balance sheet.
Click on your balance sheet.
Okay, I see it.
Go up to the top. That's a comparison balance sheet. They can compare the years, but go backwards. Go to your back button. And go to the favorites up there to a regular balance sheet at the top. Not that one, that's one. And you're gonna up at the top, you're gonna change the date to scroll up. Scroll to the top.
Where I'm going.
You want to take it all the way to the top. Let me show it. Let me take over. So you want to take it all the way to the top. Then you want to go here, and we want to say last year, and we're going to run the report. So we run that report, 2018 assets, should be -1, -3, and let's look at this. I guess we'll call this, that's the first desk. Let's look at that one. And this one, and let's see here. So this is wrong. That was so now I'll tell you how that's wrong. So that's what I love about clicking on this. So this one is the 151 for desk 3 right here. So when we bought desk 3, and there's the other 2 desks. So guess what? So these are wrong here, and this is wrong. So what we're going to have to do is we're going to go back here, and we're going to delete what we just created, because we want those amounts to reflect there. So now we're going to go here, and we're going to go and say Office Desk 1. We're going to make that inactive. Oh boy, I know what we'll do. We're gonna go back, We're going to add them to the right categories, and then we'll do an adjustment. So this one is, let's see which office desk. So what we're going to need to do is let me go in and let's print another balance sheet so I can make sure I put them in the right account. The last year. So we'll go ahead and print. Okay, and now that we've printed, so now we're going to go back to this office desk. So this office desk that was in there was a input error on our end, where the person took the when the actual desk came in, instead of creating an asset category, they put it all in office desk. So it made it seem like one office desk was $800. Do you see the mistake?
Okay.
So now me and you gonna correct it. All right, so here's the new balance sheet that I have to print out. And let's see which one's supposed to go for what. So, okay, here we go. So, office desk 2 was $156. So we got to click here. Going back to that original transaction, we're going to go in here and we're going to find office desk 2. We're going to save it. We know. And we're going to go here, office desk 3 is the one for $79. And office desk 1 and let's see what this $100 transaction was. That was an office expense instead of, that was bought at the same time the desk was built. Office supplies were bought at the same time, and they put it all on the fixed asset. So you see how we found that mistake. So, but guess what? Now we're gonna have to do some adjusted entries. So we got to do 430, 443.22 under office desk. So that now that we can zero that out. So we're gonna go here. We're gonna do an adjusted entry. We're going to date it back for December 2031. And we're going to first find office desk. $443.22. And we're going to see. Oops. Now let's go back and look at our balance sheet. Oops, my bad there. Getting debits and credits confused. We want to subtract from that, so we got to credit it. We want to add to it, we'll debit it. Easy to get confused when you're doing these journal entries. Now that we got that count to 0, now we go back in the chart of accounts and get rid of office desk so it doesn't appear in our chart of accounts, because now it had no purpose. So we're making it active. So now you see these amounts are now doubled. So now each one of these is going to have to be adjusted to the correct amount. So first we'll start with office desk 3, which is actually only $79.18. We're about to subtract from that one. Desk 2 is $156.51. It's going to have to be subtracted from that one. And desk 1, which is $79.76. So now I'm going to go back and do another journal entry to fix all of these. So I'll say office desk 3 is $79.18. Hopefully you adjusted. Balance value based on purchase price. We're going to go ahead and do them all in one entry. Office desk 2. We're going to go 156.51. Okay. And then number office desk 3. Hold 1 second. We're going to pause. So, yeah, having that, since we're talking about balance sheets, I'll stay on the, having those balances, like I was explaining to him. One of the key things with the loan process is you buy this furniture, you buy a computer, you put that in here as an asset. And now when you start going to the bank, they say, hey, we got multiple options on how we can help you with your finance. Okay, well, I got 3 computers, I got an office desk and furniture. Say that came up at $10,000. Well, now the bank said, okay, well, you know what, Lisa, we can give you 7% of that $10,000 as secured assets. So now you got $7,000 loan. You could have got off that furniture, what you got around the house by going in and putting it in as assets. So that's why this balance sheet that we're working on now, cleaning up the balance sheet, not only for the purpose of, let's talk about other ways that the balance sheet benefits you. Certain programs and certain loans require you to have so much in assets to even qualify. So what they're looking at really, the U.S. look at it like this. They want a small business, very funny, to be over $250,000 in assets. So that's what I said, every time you buy something from the business that you're going to use for the business, you're going to need to come in and do this process that we're doing now. That's why the balance sheet is so important. So you keep track of those assets, and those assets can become not only a part of that, but also your business equipment form that you got to file now with the Department of Revenue. Every year you got to file those assets. You got to pay a fee on those assets.
So all of this, that you, as we look at this is all the information. Tax returns from the previous year, personal returns, personal financial statements, board resolutions on how businesses ran, stock certificates, transfers, the articles. That's why I gave you that to treat that little notebook. Remember that little white notebook? That's why I was mentioning you came in. That's what you need to have with you. That's your favorite book. That's when you add to that book. So that's we do this. So then, because this book at some time, you're gonna need this booklet. And every year, we're gonna create you a booklet of the end of the year. All your bank statements that you've done, and stuff. To make stuff make sense. So you understand why I push the emphasis of learning this QuickBooks, but also learning the paperwork of it. And it comes with sacrifices. Like I said before, make $500. You ain't really made no $500, so you really understand what your expenses are. What was your gas to go out there to do it? What did you have to spend? Did you have to do some flyers to do it? Did you have to ship something? What are those costs? And see, now y'all been losing all those costs because you had no way to track it. That's the business. The heart of the business ain't the selling the shirts. It ain't the heart of the business being able to track that so you can see, okay, Gary, I see you got this great deal on some shirts out there, but let's see how much you're really making on this. So you say, yeah, we might have paid $5 for it, but after, and I'm selling it for 10, but I had $3 in expenses and cost of goods. So really, we make my $2 off of that. Is it worth it? We need to have more capital to buy even more at volume so that we can reduce that cost of that cost of goods to maybe $3. And now we're making $4 in the shirt. To be able to make those decisions, you got to understand that. And it all comes down to how much you spend, right? When you do and how much tracking your expenditure was on selling that product. That's why I told them I recommend for you guys to look into some drop shipping where the company keeps the clothes, whatever, they put your logo on it. When people order it, they ship it, and they just give you a cut. You see why that's you see why that's such a big thing now in online retail, drop shipping? Because you don't eliminate what? Think about it. If somebody went on your website right now and ordered 15 shirts, what you gonna do? I go in there right now, order 15 shirts from Black Rock. What you gotta do? Tell me your process.
Well, being I have the shirts on hand, I have to go mail them all.
Mm-hmm. And that means you gotta package them up. Do you have any boxing packages for Black Rock for this?
I have to go get boxes. I have to go buy boxes, put them in, have to pay me to ship them all.
Mm-hmm. And you need your time, you're gonna have to drive to the post office and all that.
Yeah, pretty much.
Pretty much. Now when you go back, how much did I pay for these shirts? Did I just sold, these 20, these 10 or 5? How do you know that? By this. That makes sense?
Yeah.
So let's finish this balance sheet. We almost finished.
So are you learning something, and you get a kind of understanding? I know we're into the advanced balance sheet now, but are you understanding the importance of how these different pieces come together?
Yeah.
So we're on, I think this one is, we've done desk 2, so now we need to do desk 1. And let's see, desk 1. Okay, that's the one that's 79.76. So now let's see if they adjust to the right figures for, let's go back to the balance sheet and tell me that they adjust to the right figures. Let's see. Yep, that's 156, 7976, and 7918. So we got a power tool here. We got a power tool here. Okay. Rent set. Okay, so now we have to do a, because we do have a new HP laptop. Let's see here. I believe, let's go to chart of accounts. I'm gonna go new. And I'm gonna let you do it. So pick what type of account type.
What was it we doing?
This is a laptop. So that would be, right? Okay, and I want you to put in here HP laptop refurbished.
Spell that for me. Well, I put a space between laptop.
It's going to be HP laptop, and we're going to put a hyphen and say refurbished. Basically used, but we use the word refurbished. REFURBISHED. And that's what I said, REFURBISHED.
Oh no, I can't.
Let me see, let me test it. I got you, that's what I'm here for, refurbished.
Okay.
And I need to go back and put that model number. I didn't have that, I will. And let's see here. And we'll say the original cost of that was $198 as of 8/5.
Wow.
2018, and we're gonna make it a subcategory of what? 2018 fixed asset. And so now we're gonna go in and put in the HP onto. We're doing another laptop. We'll let you do it. And this is a new one. And call it HP laptop 2 and put new.
Good.
Okay, and now the original cost of this was $465.43. And that was as of November 6, 2008. 18, I'm sorry. And oh yes, you remember, 2008 fixed asset. There we go.
And what you say?
And that one is November 6, 2018.
No.
It's a good job. So now I want you to do a new asset all by yourself. Click up in new. Up at the top, you see that green button at the top? Go all the way back to the top. Go all the way back to the top. See that button that say new? Click on new.
Hold on.
On the right hand side, where it say run report, and you see the tab say new. Click on new.
I don't see new.
Let me see. Maybe that's what's going on your screen. Let's check your screen.
Well, maybe, I have to move this.
Yeah, that's what it is.
Okay.
Yeah, see, that's
Okay.
that's what it was. Let's put us over here. There we go.
All right.
Now click on the word new. All right. What type of account type is it? There we go. It's a fixed asset. And scroll down. Now this is a SSD hard drive. So we'll put that on the computers.
Okay.
And we'll call that an SSD hard drive.
SH.
SSD, make it all caps.
Okay. SSD.
Hard drive. And let's call that number 1. SSD hard drive number 1, because we got to do 2 of them. And now the description, what we need to do on this is that's what we need to really put the serial numbers for these. So now you'll have, you can print a report with all your assets in their description, so you'll have a serial number. So, you know, you can put a description like, hey, that was my, you know, office computer SSD, but what's more valuable to you for insurance purposes is what? The serial number.
Okay.
So somebody steals it. So we don't have a serial number for that, so we're just gonna leave it blank.
Okay.
And then go down and remember it's a what asset, and the cost is $69.55.
You said 69, 65?
Yeah, $69.55.
55.
And this was as of 11/09/2018.
Oh. 9.
2018. There you go. And now you got one more, and it'll be SSD drive number 2. So you're gonna go, where you're gonna go? New.
No.
What type of account type? Fixed assets.
SSD.
Hard drive. And we'll call that number 2.
Okay.
And it's a subcategory of and the original cost is $69.53. And we're gonna go on the same day, it was bought the same day, November the 9th, 2018. Now hit save. All right, so let's see if we did it right. So now we're gonna go back and pull our reports. We're gonna take our balance sheet. We're gonna look at it from last year. We're gonna run that report. Now let's see what it says as our, I wanna go ahead and move the Dell laptop. There's a Dell laptop. Let's go ahead and move that. Chart of accounts. 2017 was actually bought in 2017. So we're gonna go here, edit. Excellent. Let's see here, this is our report. You see this laptop? That's the laptop that I'm getting ready to, that's the one that's in here right now. You see the original cost for that was $859, and I'm giving it to him for $500, and that's it. So that's the, see that? So every asset that you have, and you're gonna resell it once I put it on resale, I need to remove that from our assets currently.
Okay.
So let's see here. Okay, so now we can go in here and we go into chart of accounts. We can go into this accumulated depreciation. That's in the wrong section. Oh, you know what? Okay, so now we need to take a journal entry and clean that one up. So that was 890, and that should all go in here. So let's go in here, let's clean it up, get that to 0. Let's see if I did that entry correct. Let's see here. Oh, that's what I said. Accounts. Let me go back and see if it's zeroed. Yep, it is. So now let's go back to reports. Balance sheet. We're going to change it up for last year. There you go. $4,000 is my 2018 fixed assets. Beautiful. And there's my 2017 assets. Oh, beautiful, beautiful. So now let me print out and let's look at our work. And let's make this a little more informational. Oh, what I do? Let's go ahead and print this out. Take one more look at it, and then now we're prepared to send over to the accountant for his review. And we'll go ahead and end the meeting now, and we'll get ready to go into looking at and setting up QuickBooks Online. And we're going to do it from you logging in to your QuickBooks Online, and we're going to set up your chart of accounts. Thank you again. This is the EW Tech Nerd QuickBooks Online series for the eVision Business Center.